Strikes me that on the one hand, Mario Draghi seemed to be trying to be quite dovish. On the other hand, he did warn that he's really concerned about some things. But what was the message the markets took away from what he had to say today?
Well, I think a couple things, a couple thoughts I'd throw out that, I think that the approach of the ECB is going to be very similar to the Fed in this regard. Going through the 2008 crisis, having a secondary recession in the Eurozone after that almost, I think now they've landed on something that's worked. And I think that odds are they're going to stay with that longer rather than shorter period of time. That's just like the Fed. The Fed still has a crisis policy in place in the United States, even though we haven't had a crisis for a long time. I think the Eurozone is going to stay in a more accommodative mode longer as well. The second thing I'd point out is he talks about the fact the ECB doesn't have a double mandate like the Fed, just focused on price stability. But I think in reality, they certainly do have a double mandate, and they're very concerned, whether that's official or not, about the elevated levels of unemployment there yet. And I think they will continue to ease unless inflation gets wildly out of control until those come down. Last point, I think on the currency, which is interesting, and that's getting a lot of attention, breaking 120. But for me, I don't know if there's much policy officials can do about this, in the sense that I think this move in the currency is more about the reestablishment of growth in the world, and particularly in the Eurozone, relative to the United States. When the U.S. was the only boat going in the world, its currency accelerated a lot relative to everyone else. But you can't continue to price the euro close to parity with the dollar when the Eurozone's now growing as much as the United States. And so I don't know if you change monetary policy, I don't know if it affected much. I think the euro's correcting for a change in growth rates that's now reestablished in the Eurozone.
So, Julien, let's go to you. You're over in Europe. You watch this. What is the likely effect in Europe for investors, and particularly, for that matter, on the equity markets?
I think the impact really is, or at least our takeaway from this press conference today is the acknowledgement that Draghi has made that the growth is picking up in Europe, and that's really what we want to be focused on. Yes, the currency has been sort of a headwind, especially for domestic investor, not so much for U.S. investor. But we believe that this is just a reflection of the strength of this economic growth that Mr. Draghi has pointed to today. So on our side, we don't feel that this press conference necessarily changed anything. We think that European equities are still a great place to be at this point, especially because of the earnings growth that we're seeing, which is almost second to none globally. And yes, the currency has been a headwind, but we believe it's well justified, this currency strength, by the domestic strength of the economy and global growth in general, which remains supportive. Let's not forget that Europe is also a global play when it comes to equities.
It's been